Allow me to reintroduce myself. Look at this chat. Everyone's here. Can you believe it?
What's with the name today? I don't understand the reference.
Of course not. Hey, let's say hello. Dave Wysocki is here. Rachel Fintwit, Chris Hayes, David Walsh, Dylan Donegan. So many new folks. And then our regulars are here, Mike. Roger Weatherford, Rob and Nicole are both in the chat. Dave Wilson. Shout to Cliff, Jerry Gould, Jay Luther. We love you guys. Hey, thanks everyone for joining us for another all-new edition of What Are Your Thoughts? My name is Downtown Josh Brown. We are here with Michael Batnick, my co-host as always. Michael, say hello to the folks.
What do you think? I'm workshopping that one.
It was pretty good. I like the salute.
Wait,
but there should be like a thing that comes with it.
What's Rizniz? I don't understand. Is this for RZA?
We don't have enough time in the show. We don't have enough time in the show. I wish we did.
Well, you can't. I mean, your references are out of control.
Go talk to your kids. We'll figure it out later, guys. Anyone in the chat want to help Michael? That would be cool. That'll save us some time. Okay, we have a sponsor for tonight. You want to tell everyone who the sponsor is?
It's basically the Federal Reserve.
Okay, say more.
So the Fed has done this thing that some people like, some people don't. Investors, it's good for. They give you yield on your cash, 5.4% for the 6 month right now. Not bad. Not bad. I mentioned this last week or the last time of the public sponsor, but the thing that I like about public is I could see my account going up every single day. And
right. Every time interest is paid, it's ticking higher.
Yeah, but it's not like a lot of instruments distribute yield monthly, quarterly, and psychologically, I know it's all the same. I know I'm going to the same destination, but I like the journey.
Yeah. Public's always been good at user interface, so I agree. That's like it's a good reason to do your T-bills there. Go to public.com/compound and check it out. If you like it, great. I think you will. I'm a user. Michael's a user. Okay, tonight's a big night. So much stuff is I feel like things are. What's the opposite of slow motion?
Accelerating.
Accelerating. Things are accelerating. There's like. You could tell a lot of people are just trying to get news out there, just trying to get things done before year end. And one of those things appears to be the first ever spot Bitcoin ETF in the United States. It feels like there's a momentum now behind this thing, and it's like a fait accompli. It's only a question of what the first ticker is going to be, how many get done, what is the, what's the timetable on the actual launch. I don't think there's any debate anymore whether or not we're going to get a Bitcoin ETF.
I have two questions for you.
Yeah.
One is, will the approval be a local top? I mean, you got to assume that there'll be some sort of sell the news. I don't know how dramatic the sell the news will be, how long it'll last, but I want your thoughts on that. Actually, I want your thoughts on that. I have two questions, but I want your thoughts.
Okay, so the last big event like this that everyone knew was coming was the advent of a futures-based, or the advent of Bitcoin futures trading in Chicago on legitimate
CME.
exchange. So it was CME and CBOT. They both had their own version.
Okay.
I'm pretty sure.
Was this 2019 or
17? Late 17. It was literally the top. Basically, Bitcoin was a one-way market. You could either buy it, not buy it. Like you could sell it, but you couldn't short sell it, is what I'm trying to say. All of a sudden, when the futures became available, large hedge funds, large prop traders, professionals were able to do what's called price discovery, euphemistically. They were able to come in and short it if they thought it was overvalued, and of course they did. And the rest is history. It took, 5 years for Bitcoin to get back to those levels. And I don't know that this has to rhyme. This has to be the same scenario. I think the answer to your question, will it represent a top? Tell me how much more Bitcoin rallies between now and when the first product trades.
Right.
And the more it rallies, the more I'm going to feel like, well, this is it. Every schmuck is in. So I do hope it can get into the 50s or 60s. I'm not rooting against it. I still think it's like not as interesting as the crypto people think it is. But it'll be really nice for this marketplace to have a big liquid vehicle to get exposure without the risk of scams and frauds and being stolen from and huge discounts to NAV and all of the fucked up things about crypto. Like, I feel like the ETF solves a lot of these issues for the SEC. I know 3 years ago it didn't seem like that. It was like, oh, if we let them do an ETF, it's going to legitimize this shit. Those horses have already bolted the barn. Now this is about investor safety. So if people are going to do Bitcoin, I like them being able to do it in a brokerage account. I like them being able to do it via Fidelity and BlackRock. I'm a traditionalist. What can I tell you?
Before I get to the second part of this question, when Bitcoin futures were listed on the CME, and there was a run up into that,
Yeah.
the obvious difference, and there are many between now and then, is that did legitimize the asset class in a certain way. You can't argue with it. Now with the spot Bitcoin ETF approval, which is, as you said, is a fait accompli at this point, there's no doubt tens of billions of dollars will flow into these ETFs. The question is how many tens of billions, right? So
I said 100 billion, dude.
I did too, but after talking to Balchunas, that's not going to happen. GLD is like 60 or something. I don't know what the number is, but
well, do I have a time
might get
frame
there.
on this?
No, I'm saying it might get there, but it's not going to happen in the first say 30 days, whatever. But the other thing is that I want to ask you is this: the order with which the SEC allows these things to list. Is it going to be, okay, these 10 issuers, and I think we have a chart later in the doc, is it going to be the 10 issuers at once? Is it going to be a sweeping approval? Or are they going to play favorites and say, BlackRock first, Grayscale back in the line?
It would be really funny if they approved 3 of them and then gave Grayscale the nod to convert.
That'd be really fucked up.
Like a month later, the game would already be over.
Guess what? Grayscale made this happen. Like, they sued the SEC and won.
Yes, I think it had to. Somebody had to really force the issue. They really had. I respect the Grayscale people, of course, and the DCG people, and I think when we look back, we'll say, all right, they had a shitty product, but at least they had a product. No one else did. The fees were really high. The discount to NAV was really treacherous, but they kept going when a lot of people would have given up. At great personal peril. They're all suing each other. It's kind of messy, but you're right. I think somebody had to do it. Being a first adopter in finance, or being a pioneer, I should say, not an adopter, but being somebody that invents the new thing, it's really, really tough because of how regulated finance is, especially if you launch a product and you act as though you're outside of the bounds of finance for the first few years. You're not going to make any friends, and they definitely did not. So it's a crazy story. We'll see how it winds up. What's the latest that you're hearing about the timing on a Bitcoin spot ETF? Is this Monday or by the year end? What are people saying?
I heard whispers. I had a few phone calls today about January. I don't know. I mean, obviously, I don't have any inside information.
But we're in some sort of specific window now that there's a time limit on this.
So James Seifert and Balchunas and the whole Bloomberg crew and Nate Rossi are doing incredible work on some of the amendments and different filings. Yeah. And this table is a bit dated, but it just shows, and this was as of September. I mean, there's almost 15 companies that are in the process for applying for approval.
Some of these have already been denied, though, right? And then they refile?
Many times. Right.
Some of them are in purgatory or, okay.
The question is when. The other question is, you're right, Josh, to ask, tell me what the run-up is to the approval.
Yeah.
Right? And so once the SEC gives the green light, I don't know how this process works. Is it okay, we're good, we start trading on Monday? I don't know how long the window is between the approval and the listing.
So what's interesting about this is that all the infrastructure is already lined up because they've been trying to get this done for years. So they have authorized participants that are going to handle the underlying, trading the underlying, making the baskets. So all that stuff is ready to go. The TV commercials are probably already scripted. So
done.
Yeah. So I feel like this kind of thing is it's been so telegraphed and it's been so long. It'll probably come quickly. It's not they'll get an approval and they'll wait a month and try to figure things out. They're dying to do this.
How do you think this plays out? Balchunas posted this today. Grayscale hired John Hoffman. He was the former head of Invesco's USDTF biz. You don't need to throw this on the screen, John. To help lead distribution and fight in what is going to become, and here's the key part for me, an epic marketing war. There is going to be, pick a number, hundreds of millions of dollars vying for these assets. How do you think this shakes out? I'm guessing you think that just BlackRock just wins?
Yes. I think BlackRock wins. Fidelity probably too. Because it's not a marketing war. Just drop the price and you'll raise the money. A Bitcoin ETF is a Bitcoin ETF. There's no need. First of all, there's no need for 13 of these. But I get it. Who knows who's going to win? So just launch it. See what happens. Like Kathy Wood has a horse in the race. Maybe she gets $50 million in it, and then why not keep it open? What is the real cost?
Listen, not exactly. This is not an apples to apples comparison. That being said, how many S&P 500 ETFs, mutual funds are there?
No. Commodity. You said it right before. You got GLD and what's the other one? XAU?
IAU.
IAU. Enough. That's it. Commodity, oil. You got USO. I don't know. Maybe there's one or two others.
Yeah, that's a good point.
Because this is a commodity. Now, it's a useless commodity with no underlying value or use case, but still, it's a commodity.
How is it useless?
Is based on
the price
demand.
is now the price is $44,000. How is it useless? That's how much it's worth.
What is it useful for? Do we want to do this now, or should we keep moving?
The price is $44,000.
What do you do with it besides trade it?
What do you do with gold? That's not relevant. I'm saying the price is $44,000.
You make jewelry. Do you want to keep going?
The price is $44,000.
Yeah, I know. That doesn't make it not useless. They sold it at an art fair in Miami 4 years ago. They duct taped a banana to the wall and sold it for $10 million.
What if Bitcoin has no use case other than as an asset class?
Great.
Would that make it useless?
Trade it. Have fun. I don't care. Listen, I like it. I like it as a trading vehicle. I think it's fun to watch. I've been fascinated by this market for almost 6 years now.
You kind of sound. Don't say you like it. You're allowed to say how you feel.
No, I don't like investing in it. I like that it exists. I think it's fun. It doesn't affect me. I have some dollars in it. I expect to never see them again. I hope to be wrong. I hope to be surprised.
So what do you think? Yeah.
Keep in mind, I was one of the first financial advisors in the world to buy it and publicly say, I just bought Bitcoin.
True.
I bought it at $3,000. I wrote a huge blog post about it. I took a lot of shit from people.
True.
My only argument for buying it was they can't kill this thing. How could you not pay attention to something that rightfully should have died 5 times? That was it. I don't know anything about blockchains. It's not important. Doesn't matter to me. So I still own Bitcoin. Great. Hope it works. Okay.
You want to do anything about you want to talk about how about the implications for Coinbase?
Because I wanted to go through some of these charts really quickly, because this is again, it's fascinating. It's investor behavior. It's speculation. It's action. It's sex.
By the way, now
this.
sex. Now the price is $44,000. The chart on screen.
All right,
is
I'm bullish now.
the chart on screen is 41,000.
I forget everything I said. It's going on. All right. Well, I'll put that chart back up. This is just year to date. This thing's, what is this up? 150%? Bang. Next chart. 5 year. Up 1,020%.
It had an 80% drawdown.
This is part of the asset. That's part of the deal. If you're in this is what it is. Next.
I was talking with Ben about this today. It's just so crazy. Like, this is not just how the Bitcoin market works, because it's just how markets work, how markets bottom. And it doesn't matter if the market is Bitcoin or stocks or anything. Like, literally, the FTX implosion was the actual bottom. How crazy is that? If you bought Bitcoin...
Same as the stock market.
Yeah, same as the stock market. When the news is darkest.
You're right.
Like, it's going to zero. No, actually, this is the bottom.
Dude,
Fucking
Facebook
crazy.
blowing up in the fall of 2022 was the bottom for FANG, for tech stocks. It's so true.
More charts.
It's just like stocks. More charts. This is, what is this, 3 month?
This is it's wild.
It's up 60% in 3 months.
Yeah.
I mean, this is, ladies and gentlemen, this is Bitcoin.
Next chart. So you might say it's useless, whatever.
It's so useful. I'm using it right now.
Address. The orange line is the black line is the price, and the orange line is addresses with more than 0.1 Bitcoin. And this doesn't really doesn't really follow price that much. It's just up and to the right.
That's interesting to me. Like
Listen,
the holders are growing regardless. Is that what
I've said
saying?
it before. I've said it before, and I'll say it one more time. One of the thesis, investing thesis that really clicked for me. I don't remember when Bill Miller said this in an interview with Barron's. He said of Bitcoin, the supply is increasing by 2% a year, roughly. Do you think demand will increase slower or faster than that? And I said,
well, last year slower.
Slower. I said no, but that chart shows it. Like, this guy's smart.
Christopher Brown, not related to me, is in the chat saying schmuck insurance. That's the way I view this. And you, Michael, you said this before I did. It's like, I own this because, God forbid, everyone that's been talking about it actually is right. I will want to kill myself.
So I
agree with that take.
I spoke about this with Animal Spirits with Ben. I am no fan of the Bitcoin mentality. It seems a bit anti everything that I'm about. But the idea that this thing could go to $100,000 or whatever, I would have jumped right out the window. And so in order to protect me from turning into a really angry person for no reason, I bought. That was why I bought initially.
FOMO. It's a FOMO hedge.
I have FOMO, and so I protected myself from myself. Let me give myself a bit of a pat on the back. So I did 10 predictions for 2023, and God knows not all of them came true. But one of them, like for example, value outperforms growth again.
You did.
That didn't come true.
Say that. Look at you.
So here's what I wrote. So Bitcoin gains 100%. I wrote, this is January 2nd. I wrote, and Bitcoin, I don't know what the price was at that point. It was low. I said, it's hard to make the bull case for an asset class that feels like it comes with career risk. With all the negativity surrounding the space right now, I'm amazed that Bitcoin isn't below 10K, and maybe that's what the bulls can hang their hat on. This seems like the most improbable prediction on this list, and one that few are positioned for. Crypto will double in 2023.
Put that back up. What a shame. Right after that, you said energy stocks continue to outperform. Worst performing sector of the year. Yeah. All right.
Well,
sorry.
I also said gold makes a new all-time high.
Yeah. Good for
Not
you.
terrible.
You got it.
Not terrible.
You got it.
And
all right. I'm just teasing.
Market gained double digits. That was a fucking good call. Stocks avoid recession.
Good call.
All right.
No. Listen,
all right, let's move on.
Let's move on. Coinbase, quickly.
Oh, yeah, Coinbase.
I got this one really wrong. At $30, I was like, it's worth 10.
It's going to, you said, no, I believe you said, I think it's going to zero.
I said I hope it goes to zero. I really thought it could be single digits. Oops. It's about $140 stock now. Do I have that right? This is why I don't short. This is why I don't short stocks, because I get emotional, and I don't know. Like, what do you think happens when the ETFs come out? Isn't that competition for coin? Isn't that competition for Coinbase?
Yes,
I know they're the custody. Blah blah blah. I understand all that.
I'm not even forget about that angle, which will be a source of revenue for them. Guess what, dude? The ETF trades from 9 to 4. Like, institutional investors want to trade when they want to trade forever,
and trade there.
And they're going to trade at Coinbase.
I'd buy
it's the trusted brand in the industry. So what's good for Bitcoin, what's good for crypto is good for Coinbase. It just is. So is the ETF going to attract a different set of users that won't use Coinbase? Sure. But that's bullish for Coinbase too.
Yeah, people like me, where it's like, all right, I don't need to trade this thing. I'll just own a little bit. I get it. Like, if it goes up, there's probably other coins that go up more. I really don't care. Like, I'm the perfect user of the ETF. And I actually liquidated my Coinbase account, and I'm only invested via the index thing. So I could literally care less about Coinbase at all. But I got that one wrong. Okay, you're up next.
Okay,
what are we doing?
This is one of the things that wasn't supposed to happen. The idea that the Fed is going to jack rates from 0 to 5%. And I know we've spoken about this before, but it really bears repeating, so forgive me, but I can't help it. And overall corporate debt interest payments were going to go down, not just go down, plummet to a 40-year low. So the chart that we're looking at here is, yes, interest rates are over 5% plus. However, as I've mentioned many times, 90% of the debt in the S&P 500 is fixed long-term. So it doesn't matter what the Fed's funds rate is because they locked it in 2021.
Yeah, it's crazy.
They gorged on cheap debt. And so what's happening, the reason why this chart is going down, why the borrowing costs are going down when they're going up is because all of the cash is now earning a significant return that outstrips the borrowing costs. It's crazy town.
Yeah, it's the literal inverse of what historically the Fed has had in mind when it's tightened policy, raised interest rates. They expect companies to be not in worse shape, but less willing to do things. That's not going to be the case here when companies have locked in 2 and 3% borrowing rates, and now they're earning 5% on their excess reserves of cash. It's not going to work that way.
I was talking
Crazy,
with Alex Morris of FM Investments today, and this sounds incredibly obvious that I was almost like embarrassed to have this realization dawn on me. That take like Microsoft or any investment grade bond for that matter. The relative attractiveness of those bonds is much higher today than it was when they issued those bonds. Microsoft was issuing bonds at like 3% or whatever. And just because of prevailing interest rates today, the prices went down to reflect new interest rates. Did Microsoft's fundamentals go down? Are those bonds any less secure today than they were when they issued them? Of course not. You're getting the same bond, the same company,
Yeah.
bonds at better prices. It's really, this was not supposed to happen.
Right. It's just everything. It's upside down world. It's yet another ripple effect of how bizarre the pandemic era economy and market situation was. It's like one more ripple from that period of time. We're like still experience. It's almost like the timeline broke and we're on an alternate timeline. I don't know if you watched Loki season 2. It's like the time variance authority just lost control.
I fully disavowed Marvel, but how is Loki season 2?
I mean,
Yeah, exactly. Okay.
I like the actor, Tom Hiddleston.
He's great.
Or
He's great.
something.
Is
Yeah,
Owen
he's
Wilson
great,
still in it?
So. It's only 6. Yeah, Owen Wilson I like too. It's only 6 episodes. I powered through.
What's this chart
I wouldn't recommend it.
Okay, from Ed.
Well, this is part of the story. The bond market's risk-on party is visible in the narrowing yield spread between high-yield corporates and 10-year Treasury bonds. It's not supposed to do this. It has dropped from 564 basis points on March 24th during the height of the banking mini panic to 412 basis points on Friday. You're not supposed to be tightening rates all year and have a narrowing yield spread like this between junk bonds and 10-year Treasuries. It's meshuggah.
Put that chart back on. I got to say something.
Go.
If somebody asked me, or if I had one chart, seriously, I haven't really given this a lot of thought, but if I had one chart, if somebody said to me, hey, I'll give you one chart for you to determine the state of the economy, what would it be? It might be this one. Give me
high yield minus 10-year Treasury yield. Really?
Just spreads, corporate spreads, whether it's high yield or corporate or whatever. Don't tell me about the chart off. Don't tell me about leading economic indicators or
index
or ISM or any of that shit. Tell me what the bond market is doing. Tell me what spreads are doing, what the actual money is doing relative to the treasuries. That's all. That's it. That's all you need to know. Now, I don't
hate that idea.
Is it right all of the time? Does it see every recession or coming? Of course it doesn't. But I'll take that over opinions 10 days of the week.
Show us the next chart. This is yours.
Okay. Our boy Urian Timmer. What will the Fed do next? No one knows for sure, but the higher for longer trade has been a crowded one, which could explain the 72 basis point reverse on the 2-year yield. So if you look at a chart of yields, they're coming in pretty significantly. And as always, I know we joke on the show, but it's true, positioning really matters. Positioning really matters. And so the short rates trade, or the shorts price trade, the higher for longer rates trade got incredibly crowded, and that's unwinding now.
Yeah, and somebody said we did that thing with Caleb yesterday, the 10 biggest financial terms of the year. How come positioning didn't make the top 10? Don't you feel like that was missing? Like how much time did we spend talking about positioning? Were people not
positioning
Googling?
It's not a search term.
They didn't hit. All right, so when you search positioning, you don't hit Investopedia for it.
You know what? I went to shout to Caleb. I went to Investopedia today. You know why?
Why?
What did I Google? I Googled. I think I Googled. What is it? What's the term of it? The 19B4. It's like it's some sort of amendment.
Christmas.
19B4. It's like some sort of SEC filing, something or the other.
Oh, I don't even know what that is. So what'd you find?
I didn't understand it.
So you read it and left, and you shared this with us, and you still don't know. All right, I challenge you to pick one stock for year end. I love this stuff. It really forces you to think inside the box. Like,
you know
what's
what?
the most obvious thing you have? Because it's December 5th. You have like 25 days left. 26 market date. Not even 26 market days. 26 calendar days. What's the most likely thing to rip?
So you but that's very important. I wanted to talk to you about this. The way that you ask the question is very important, because if we're just shooting for the moon, like literally pick the stock that is going to have the highest returns, and you're not penalized if you're wrong on the downside. Like, are there risk adjusted parameters? You know what I mean? Like, because
I didn't take it that deeply, but
that would have changed my answer dramatically. So why don't you go first, and then I'll go second.
I picked Robinhood, and to be very clear, the show is not disseminating financial advice to anyone, and I am not personally doing this trade. But if somebody said, pick a stock that could rip into year end, I think like the runway is greased for Robinhood to work. It's do we have like a chart? We have a chart of this. It's $10.50. It's the spike has started. It had an increase in short interest month over month. It's heavily involved in this crypto shit. Like,
up 10%
crypto is
today.
Really important to Robinhood's business.
Yeah.
And I don't see any reason why this couldn't get to 12 or 13
if
crypto trading volumes come back. You have 28 million shares short as of November 15th. Let's assume a whole bunch of those might want to cover. If it gets to 11, it could get to 12 with its eyes closed. Percentage-wise,
dude, it could get there tomorrow. Josh, it was up 10% today on monster volume, and a lot of that had to be short covering. So,
in fairness, I put this in the doc earlier today, so I deserve whatever move it made today. So
this is a great pick.
I won't take it.
This is a great pick. So, in my defense, what I'm about to say, I gave this very little thought. Okay, I had a very big.
We always appreciate when you do that.
I had a very busy day, but what I came up with was DraftKings, and.
Where is that? I don't even know.
There's two reasons why. It's got phenomenal momentum.
Oh shit! Look at this. This is. Has this tripled this year?
So it's not like if you look at a chart of Uber, which all credit to you, Josh. At this point, Uber has gone vertical. Like it's not. It's like it's so far stretched above any sort of smoothing average. You know what I mean?
Yeah.
I really like the momentum of DraftKings, and not that fundamentals matter even a little bit.
Not for the next 26 days, no.
But just in order to explain the move, I thought this was kind of interesting. So in their investor day presentation, they shared that the acquisition cost of these customers was astronomical, right? Caesars and FanDuel and DraftKings were just spending oodles of money in 2020, I guess in particular, and it takes a while for these customers to pay them back, obviously. So in acquisition year. From year one, it's almost a break even, and then in year two, it gets a little bit better. The profits.
And now they're starting to make money on all these.
So excuse me, I'm one of those schmucks.
Sorry.
Nope, actually, I use FanDuel. I'm a FanDuel schmuck. Next chart, please. So this chart corroborates what we're looking at as free cash flow. I'm sure that they did whatever they could to get lean, but they were just hemorrhaging money to the tune of almost $1 billion a quarter, and those losses have shrank dramatically. Again, not that this matters for the next 25 days, but that's how we got here with DraftKings having a really kick-ass year.
I think if we're saying like a year-end rally, you got to just look at the momentum that the stock has, which this one does, and the short interest, and just let nature take its course.
And one thing that I like in addition is that it pulled back a little bit from its highs, just a little bit. So I like the setup going into year end for DraftKings.
A little bit.
Just a little bit.
Jerry Gould points out we both picked gambling stocks. True. Good point. One thing on DraftKings that I think is kind of interesting, basically like online sports betting, like, is the support structure for the entirety of the podcast business. Like every podcast I listen to is being sponsored by sports gambling apps. It's like the only game still in town. All that other shit went away. Like we'll send you meal ingredients, gone.
What was that company? What were the meal companies? There was one big one.
Blue Ribbon or
Blue Ribbon. Blue Apron. Blue Apron.
Yeah. Well, right now it's Caesars, or it's DraftKings, or it's FanDuel, and they're sponsoring like stand-up comedians. They don't even care. They're just spraying. How come we're not getting any of that money?
I got hosed last night. I moneylined the Jaguars with 1 million different props. It was tough lot. Hey, you win some, you lose some. Tough beat. Prayers up for Trevor Lawrence.
What do you want to say about the not the tech bubble?
All right, who tweeted this? Daily Chart Book. This is from Bank of America. All right. Using price to earnings ratios as measuring sticks, each Magnificent Seven stock would have to rise by 55% without any change to earnings for the group to reach just half of the peak valuation of the largest 7 tech stocks of the tech bubble.
Ooh, look at this. Yeah, so you could make some comparisons, but some just fall right apart. You know what I mean? What do you think? I don't know. I struggle with where this goes from here. Like, it obviously is not sustainable, right?
False. Chart off.
Like, this can really keep going for another year.
You think 2024 the AI bubble is going to burst? It just started. And I hesitate to call it a bubble. The AI hype.
No, but they could just have a new group of stocks that take over.
Nah.
Like, you could.
We don't do that anymore. It's just the winners win.
Yeah. No, but there are other winners. There are stocks that are up 100% this year that are just not Mag 7 stocks. Can't those keep getting bigger? There are cybersecurity stocks that have doubled, like 5 of them. There are communications stocks that have doubled. They're just not Mag. But like they could outpace these stocks.
I'm toying with the idea of throwing this in my 2024 predictions. I don't know if I'm getting too cute. What if 2024 is the revenge of the nerds equal weight style?
I'm toying with the idea of having Sean do like the next 7 tech stocks that are behind these, and
I like it.
we start tracking those because those are going to be more interesting. Like the ones that made it there, I think like Adobe's on that list and Salesforce, and I'm trying to think of what else would be big enough. We'll table that for another time. What's this next chart?
All right, this is great from Ned Davis. The largest 10 stocks by market cap. It's showing the year-over-year earnings growth versus the S&P 500. And
what's the bottom pane? The difference between earnings and sales growth for the top 10 stocks.
So
in the S&P 500? Oh my God.
I think the blue line is the top 10 stocks by market cap.
Yeah.
Actually, you know what? That's a good question. Don't worry about it. Don't worry about it.
It says it's earnings, pure earnings, and then the
Chart
bottom
plots to
is minus the S&P 500's earnings.
Right.
Yeah.
So the top is pure and the bottom is relative. And yeah, listen, speaking about NVIDIA, the company is in a new generational defining category.
Yeah.
It's growing sales 100% year over year and 35% quarter over quarter.
Yeah. What should the stock have done this year?
What should the multiple be for that?
Should it be down?
And it's not.
The multiple is actually down. The multiple is actually down this year. How about that?
What's forward earnings?
Literally.
What's forward earnings for NVIDIA? Is it 40? Does that sound crazy?
No.
Not to me.
No, I don't think so.
What do you think? It's lower?
I don't even think it is.
Okay.
I don't know. Somebody in the chat could tell us. All right, I want to keep moving. I wanted to just mention Uber. There's nowhere. I didn't really have a natural place to put this. I put this on LinkedIn today. I feel like Dara has just orchestrated maybe one of the greatest corporate turnarounds of the 21st century. And there have been a few. Like Netflix is definitely in the conversation. I think Meta over the last year, Tesla.
I hated
bankrupt.
I hated Uber.
Well, I bought it wrong. I bought it in 2020. I bought it like near the old IPO era highs, and then I sat with it for years. But then I started to buy more, so it ended up turning into a winner. But I was down bad in this stock for a minute. And
well, guess what?
The
company was down bad. It was
it wasn't my
hemorrhaging
fault.
money.
I agree.
It was
blameless.
hemorrhaging money, and he came in.
Blameless in this situation.
There should be like CEO of the year, like a turnaround.
All right, dude. Not
awards.
only did he come in, he came into a scandal-ridden situation where the founder was out of control. He was tracking female journalists using God mode and watching them take Uber rides. It was like so crazy. And they had to get rid of this guy. He was toxic. They brought in Dara. Dara had the experience. He had worked under Barry Diller. and at some very big internet properties. I think Expedia is where he cut his teeth. They brought him in. He inherited a mess. The company was losing billions of dollars. They had poor relationships with the drivers. They had lawsuits and fights with municipalities and state governments and country governments. They had all these non-core assets in China that they were losing their ass in. He had all of that to clean up in his first 3 or 4 years. And then when everyone said, get rid of Eats, the pandemic happens. Eats saves the company because there was no rides. And then they come out of the pandemic and effectively, people say they will never be profitable. They're profitable on both Eats and rides, and it smashes through $100 billion market cap. Like, nobody in their right mind would have expected this outcome, I don't think, in like 2018, 2019, when this stock was in the 20s. And then the pandemic, you would have thought it's going to zero. So he really, I think, is like an unsung hero of our era.
And guess what?
Deserves a lot more credit than he's getting.
Look at the chart of Lyft.
Yeah, oh, right.
Lyft is dead. Lyft is dead. It's not like Lyft is winning too. They're dead.
Yeah, that's the alternate reality. Lyft, which the founders ran for way too long, ran poorly, didn't make any of the moves that Uber made. That's the other way that this could have gone easily. So now
Lastly,
the reason I'm bringing it up is they got on Friday, they got the word that Uber's going into the S&P 500, which is a really big milestone for a company.
That was known.
No, everyone knew. That's in part why it's been running up. It's a really big milestone, though, for a company that was losing money when it came public. I think it lost a record amount of money the year it came public. Nobody ever came public with a bigger per-share loss than Uber. And that was then, this is now.
One final thing from me on Uber is that Dara was the first CEO that I can remember to come out and say, okay, new rules. Yeah. Wall Street, it's like what Wall Street wants. They don't want us losing money anymore. And he did it. He really did it. So all credit to him. And
he did it early, and it's not a social network. It's an expensive business to cut costs in.
And credit to you for buying the stock.
I am a genius. Okay. That'll offset some of my not so great ideas.
That's a top for Uber. So
okay. The last BLS non-farm payroll report of the year is on Friday, and I think this one's interesting. So here's why. If you ask me to reverse engineer why we just had the best November or one of the best stock market months of all time, November or otherwise,
positioning?
I would say the October jobs report, which we got on November 3rd, which was a Friday, that sparked it. So we sold off all through October. Markets were a mess. August, September, October. An absolute mess. Actually, all three major averages were down for Q3. And then we get this super moderating jobs report on November 3rd. And I don't think stocks even had a down day.
Dude, all kidding aside,
crazy. What happened?
Q3 was the summary of the quarter was higher for longer. Like that was the narrative of the third quarter, and that got unwound, to Urian's point, really quickly, and it manifested itself not just in the bond market, but really in the stock market. People were not positioned for that.
So now we're looking for November non-farm payroll to be at around 180,000 jobs added. This is now we're firmly, if that happens, now we're firmly under 200,000. Of course, we've seen these numbers be all over the map. And the other thing to keep in mind, why there's going to be some drama, is that there's a lot of holiday-related seasonal hiring that takes place during the month of November. So we really don't know exactly what the effects will be on this specific number. You got auto worker strikes. You got a lot of stuff going on. But I think that moderation in the job market that we found out about in early November sparked a huge 9% S&P rally, 11% NASDAQ rally. And this, if you ask me, like, all right, the Fed has its last meeting. It's on December 13th. There's only one CPI report left this year. It's the day before, the 12th. The PCE is after the Fed's meeting. So let's just say it doesn't matter for this meeting. If the Fed does nothing on December 13th, it'll be the third the third meeting in a row where it's done nothing. If anything could make them hike, I think it's what we're about to see on Friday. Like, if that's a crazy report and it goes the other way than what we expect, unemployment rate drops or wages spike or there's some huge beat to the upside, then we're back to talking about one last rate hike. Right now, 99.7% odds of no hike, according to the CME's FedWatch tool. This is, to me, the only economic data point we're going to get that could conceivably change that, and that's why I think it's going to be interesting. Did you see the JOLTS number today?
Told you I was very, very busy day.
We got the October. Available jobs, 8.7 million. Look how fast this is coming down. Remember that was 12 million, and people were like, "What the fuck?"
Yeah.
It's coming down real fast. So there are 1.3 jobs available for every unemployed person right now, which is still a pretty good job market. It's cooling. And this is the lowest number of job openings in a month that we've seen since March of 2021. So this is a notable retracement of the labor market madness, which bodes very well for future inflation prints, in my opinion. What do you think about that?
Yeah, I don't know at this point where a spike would come from.
I don't think you're going to get a spike. Like I think now we just normalize. There probably were never 12 million real openings. That was probably never a real number.
Speaking of retracement, the AAII bear index, just the bear, the 4-week change, bears ran into their cave to the levels that we haven't seen since 2009, since the bottom of 2009. How crazy is that?
Yeah. Well, that happens fast.
Again, 6 weeks ago, things were looking pretty dicey. Higher for longer. We closed below the 200-day moving average. Like, things were not looking great.
I told you about that guy I ran into at the gym. He's like, I'm shorting rallies. I'm like, really? It's December. You really want to do that? All right. Let's do these charts really quickly from the Wall Street Journal. Signs of a weakening job market in 5 charts. This is job openings and the unemployment level. The unemployment level, you can see, is gradually rising and openings are falling. This is exactly what a moderating job market should look like.
Oh, this is millions. I'm sorry. I saw the 5 and I thought percent. Okay, it's
Nope.
number of. Okay, got it.
This is actual number of people. Next chart. This is important. These are quits and hire rates. In October, the quits rate held steady at 2.3%, but it's been trending down since hitting 3% in April 2022. In April 2022, basically, everybody's quitting their jobs and getting instant raises. Yeah. That's not what's going on. Next chart. This is just non-farm payrolls, what we were talking about. They're showing the estimate at 190. I read 180. Split the difference. Keep in mind, we were doing 400,000 jobs a month in 2022. In 2021, we were adding 600,000 jobs a month, obviously skewed by the comps from the pandemic. So now we're under 200,000, they think. Next chart. This is hourly wage growth.
This is a big one.
This is important, right?
It was the wage price spiral. That was like the thing that people were understandably, rightfully concerned about. Like that was the big risk, and it didn't materialize. Thank God.
5.2% hourly wage growth in October. We're about to find out what November's is, and that'll be important. I think this is my last one. Yeah. Finding a job gets harder. The Journal says the unemployment rate remains very low. Economists estimated it held 3.9% in November, but it has risen a half percentage point since the spring. Such an increase usually comes right before a recession. Okay, slow down. But this is I think Americans have been applying for continuing unemployment benefits the most at the highest rate in about 2 years. So, like, people aren't getting a job so fast. Do you understand what I'm trying to say? I'm not saying it right, but do you see what I mean?
Yes.
So that's the job market, and that's what the Fed's been trying to do. So, all right, it's you.
I want to talk about Spotify. There's this great site called Layoffs.fyi, and you could look at this by sector or industry or sub-industry, and let's look at tech layoffs. So the pane on top shows it by monthly, going back to 2022. The bottom one is a clearer visual of what we just lived through.
Yeah.
There was an acceleration of companies laying off in 2022. A little bit in Q1, more in Q2, more in Q3, more in Q4, and a crescendo in Q1. Just layoffs everywhere.
Q1 of this year. That was the peak in layoff announcements.
As companies got fit, Meta, Amazon, Google. I mean, they
all did it at once.
They all did it. Spotify did it a couple of times, and then the latest one that they announced was, I think it was it 17% of the workforce or 1,700 people? I can't remember what it was exactly.
No,
It was
Spotify
17%,
is in
I
its
think.
third round of
Yeah.
job cuts this year, and it's another 17% of staff.
So
That's a lot.
I read this, and my reaction was, and I'll read what he said. I wrote in the doc, I don't really buy this. Spotify took a huge swing and missed. So here's what Daniel Ek said. I realize that for many, a reduction of this size will feel surprisingly large given the recent positive earnings report and our performance. Yeah, you think? We debated making smaller reductions throughout 2024 and 2025, yet considering the gap between our financial goal state and our current operational costs, I decided that a substantial action to right-size our costs was the best option to accomplish our objectives. There's one other thing. In 2020 and 2021, we took advantage of the opportunity presented by lower cost capital and invested significantly in team expansion.
They gave it to Bill Simmons.
These investments generally work.
And the Prince of England or whatever.
Here's the thing. However, yeah, exactly. However, we now find ourselves in a very different environment. So he blamed it on the macro, as one does. I don't buy it. It was good cover. I just don't buy it. They took some big swings. And listen, I'm not mad at him. Like he's running a business and he's doing. I'm sure this is very difficult. I'm sure he doesn't want to lay off people from business decisions that he and the company made. But then you put this in the doc that like the Wall Street Journal was like actually masterclass in how to lay off a company.
Yeah. All right. So first of all, I fuck with Daniel Ek heavy. I like
Daniel Ek.
Yeah, I think he, like, not single-handedly, but was instrumental in saving the music business. They don't see it that way because they need, like, 1 billion streams to get a nickel. But that's where this was going no matter what. It's really nice that somebody turned it into a business where artists could get something. Otherwise, they're, like, back to selling CDs on their own websites. I don't even know what would have happened if not for streaming coming along and replacing all the piracy. Because the internet was going to be used as a medium for people sharing songs. There was other way that this was.
You know what else he's doing? He's the only guy who's like vocally standing up to Apple and saying this is bullshit.
I don't know about only guy, but yes, prominently.
He's the loudest. He's the loudest. He probably has a lot to lose.
Yes.
Before we get to how the Journal covered this, just throw up this tweet, please. So this is from Vivek Goyal. He wrote, during the excess of COVID, many companies and investors came to the wrongful conclusion that COVID-era growth rates will persist, leading to significant increase in investments. Spotify obviously is in that category. Then he says, however, as the tide turned, companies who realized their mistakes sooner and cut costs faster have been rewarded faster, flatter is faster, leaner is better. So what we're looking at for those listening on the podcast is the change in 2024 free cash flow estimates since the beginning of January this year. And just again, you've got just changing free cash flow estimates. Meta 135%, Shopify 288%, Spotify 36%, Salesforce 21%, Amazon 40%. And I'm not going to read the numbers, but all of the stocks that these companies represent were heavily rewarded due to this. These companies don't just go up because investors are piling in for no reason. Right, like there are fundamental reasons why the companies have done as well as they have.
Are they going too far though?
Maybe.
Are they cutting? Are they firing too many people that now?
Oh, I thought you meant the stock.
Yeah,
I doubt it. You got to imagine these companies are bloated.
So Chip Cutter at the Wall Street Journal dissected the Spotify CEO's layoff memo that he sent to all employees, and just like demonstrates like how masterful it really is. One of the first things he does is tie the situation at the company to the macroeconomy. Thought it was funny. He's like, economic uncertainty. LOL. When is there economic certainty? Tell me when that day is.
Yeah.
Are any of us certain? Fine. And then right sizing is like we're not laying people off. We're right sizing the business. It's actually true. They probably did go crazy and have to peel back some of that. Anyway, I thought that was a good read. Okay, we're going to do Make the Case, a mystery chart, and then we're out. I see the clock is ticking, so I'm going to do this relatively quickly. I am probably top ticking this stock. I bought a little bit. The ticker is IoT. The name of the company is Samsara. This stock's already up 180% on the year. Perfect bottom fishing candidate. Look, I don't think I'm getting the best price I'll ever get, so I didn't buy a lot, and I do not think that anyone should follow me into the stock. But I do think people should listen to their last conference call because, as you could see in this chart, when they reported last week, this thing went absolutely nuts, and not for no reason. This company had a coming out party. It is now profitable, looking at over $1 billion run rate. Basically, what they do is they digitize physical assets for huge companies. They just got a contract with the government of New Orleans. Government of New Orleans has like 42 different agencies. They have the police, they have the firefighters, they have the paramedics. Every single vehicle they have in the field is another vehicle that should have data being collected on it so that it could be used more efficiently, so that central command knows how much mileage, how much usage, where are we positioned, et cetera, et cetera. So it's security, it's video telematics, it's cameras, it's AI. It's got every buzzword under the sun. Even the ticker is a buzzword, Internet of Things. But it's a big business. And that, I listened to the conference call after seeing what the stock did. Like it grabbed my attention. And I just said, you know what? Maybe I'm top ticking it short term, but these guys know what they're doing. And this thing looks like it's going to run the table. So I'm a shareholder, new shareholder, but learning the story. I have no idea what the next 10% will be, but I want to stay long this story. Interestingly, Mark Andreessen is on the board. They were early investors. It's a San Francisco-based company, and it's global. They're doing business. They announced 150 new customers paying them more than $100,000. That's like what they would consider to be a large customer. They're signing that was like a 49% increase year over year just for the quarter. So I think it's an interesting story, and wanted to make the case for at least researching it, if not outright buying it. Any thoughts? Any reaction?
What's the name mean? Is this a U.S. based company?
San Francisco.
Holy shit! It's got a $19 billion market cap.
Yeah, dude, it's a $1 billion run rate and it's profitable. It's not a bullshit. It's not like a startup. It was a startup and they had some really prominent money, venture money, but now it's a business.
And it's only trading at 648 times forward earnings. Yeah, no, I like it here.
It's a steal when you think about it.
All right.
We'll see. Don't get mad at me if it's 28 next week.
Listen,
don't email me,
Josh. We're all grown-ups, right? We all make our own decisions and then we blame other people for them. That's how we do it. Okay. Mystery charts, John, if you would. It's a long-term view. So wait, hold on.
Keep this up. What is this? This is a stock?
Well,
7,332?
I should have blocked that. All right, it's an index. My bad. It's an index. Look at the next one. These are similar but different. I mean, that's basic. Those are all-time highs now.
Let me try to understand this. I have to guess both of these indexes?
You can guess one. You can guess the other. These are indexes.
What do they have? All right. So maybe give me a hint. Like, what do they have to do with each other?
Geographically, they're.
All right, so these are country stock markets.
Yeah.
You're saying? Okay. Give me the first one. Okay. This is the FTSE 100.
So the first one looks better than this. I mean, the second one looks better than the first. Close.
Okay. This is Germany.
Nope. One more.
One more guess.
Yeah.
Is it? I'm in the right part of the world.
Yeah. I would have told you if you weren't. You're scorching hot. I would have told you if you were way off.
All right, give it to me. What is it?
It's the CAC. This is the French.
The CAC?
It's the CAC.
It's always the CAC. And you never expect it to be.
Nope, but that's what it is.
So
next
that's
one.
The French stock market? Okay,
yes.
Give me the next one. And this is the DAX. Yeah, what's going on here?
I thought Europe was on fire.
Like in a negative sense.
Dumpster fire. No, it's DAX basically at all-time highs.
These are all value stocks. There's nothing expensive in those markets. They don't have any tax.
So maybe 2024 is the year of the.
Oh, you know what's
equal rate.
France? Like L'Oreal. It's like cosmetics, and then LVMH.
LVMH.
And then probably like a power plant, a nuclear power plant, and a shitty bank, and an even shittier telecom.
All right, watch your mouth.
That's the Parisian
A lot of French viewers.
My bad. No, it's great. It's really good. Hey, everybody. Did you know that tomorrow is Wednesday, which means another all-new episode of my favorite podcast, Animal Spirits, with Ben Carlson and Michael Batnick? It's true. Your favorite podcast app will have that show first thing tomorrow morning. Brand new Ask the Compound with Duncan and Ben on Thursday. And this Friday, we have a fan favorite returning champion guest. You're going to love the show. There'll be so much more to come. Please stick with us. Please keep watching and rating and reviewing, and we'll see you soon.